Well, hello, everyone. Welcome to your Daily 5. I'm Joe Duarte, author of the best-selling book, Trading Options for Dummies. After this video, please feel free to visit my website, joeduarteandthemoneyoptions.com, for a free trial subscription. And thank you for spending the next 10 minutes of your valuable time with me. Today, I want to discuss some macro trends in the market for 2021 and how to adjust your trading to make money accordingly. So we're going to talk about 5 ways to trade successfully in 2021. Let's look at some macro trends in the markets, the economy, and people's life decisions. The MEL system, which I've described in many of my articles and my books. And the big boogeyman and elephant in the room is COVID-19. There's a lot of interaction there. There's a lot of potential changes. We have vaccines, we have stimulus packages, and all these things are coming together, and they're creating a little bit of uncertainty right now. I'm going to tell you how you can cut through that uncertainty in a couple of minutes here. Of course, interest rates and stimulus packages. The Fed keeps pumping money into the banking system. The bond market's having some doubts. And now we have the stimulus package with the new administration. And of course, there's going to be politics, so there'll be some back and forth. So that's the big picture. But you know what? What are people doing? What we've learned after COVID-19 is that people stopped going to rock concerts and baseball games, but they're increasing their outdoor activities. A lot more camping, camper sales gone up. Financial sector, interest rates have been creeping up in the bond market lately, and some of those stocks have done well. There are some possible changes in housing. That remains a viable sector, but we need to look at that carefully. And of course, dining out, not so much anymore, but people are doing takeout. So companies that have pivoted to that may do well. And as always, there's the technology sector as it adapts to the new dynamic as this COVID-19 situation evolves. So as always, let's look at those sound trading principles. Don't fight the Fed, don't fight the market momentum. Those are givens. As I'll show you in a minute, we're still in an uptrend. Stay with those strong sectors, trading those small lots. If you're trading 500 share lots, you might want to pare that back because there's a lot of volatility. Take profits when you get 20% gainers. Keep those sell stops no more than 5 to 8%. A lot of volatility in some stocks, and the news cycle continues to move rapidly. So things, you need to protect yourself. You want to monitor those lagging sectors for potential turnaround candidates. And you want to manage that cash wisely. Don't be in a hurry to get back in, but at the same time, as I'll show you in a bit, when a stock dips to maybe the 50-day moving average and starts moving up, you may want to buy that dip. Let's look at the really big picture here. New York Stock Exchange advanced decline line, complexity zone where everything goes well, chaos zone where everything goes wrong, edge of chaos, 200-day moving average, 50-day moving average, where there's a mix between chaos and complexity, and things can explode. We see that when we cross the 50-day moving average to the downside and then the 200-day moving average again to the chaos zone. Things can get crazy. Saw it again over here with COVID. Remember the 50-50 sell signal? When the advanced decline line falls below its 50-day moving average, simultaneously with the RSI below 50, things can get kind of crazy. So let's make sure we keep an eye on that. All right, let's get to it here. Interest rates, bond market bottomed out in March of and August of last year, started moving up. The U.S. 10-year Treasury bond yield, Treasury note yield. And we've had a huge move to almost 1.2%. Now it's backing off a little bit, but it looks as if interest rates are no longer going to be down here in the crazy range near zero. And it's above the 200-day moving average and above the 50-day moving average. And we had this little bit of a golden cross here. I'm not much of a golden cross guy, but something to keep an eye on. The big thing here is that interest rates went too far too fast. They're above the Bollinger Band, the upper Bollinger Band. They've come back in. But if we don't get a fall below 108 on the 10-year note, get ready for interest rates to probably have another leg up. That's important because we have to see how the stocks in the stock market behave if that continues. So let's look at American Express, financial stock. They have a little bit of an issue going on with the SEC and the Justice Department, but I'm not too worried about it. Neither is the market. The key here is the 125 area. If American Express can take out 125, I would expect the stock to move nicely higher. It is well in the complexity zone, above 200-day, 50-day. Again, little golden cross, accumulation, distribution, nicely moving higher. Unbalanced volume starting to turn up. have to consider the financial stocks. Usually kind of wallflowers, but their time may be coming. Excuse me. Let's look at these outdoor activities. This is Academy Sports and Outdoor. This is an IPO that I've talked about before in October. I own this stock, and I also own American Express. But let's look at this. Every time ASO drops to the 20-day moving average, the dip buyers come right in and the stock moves higher. It looks to me as if the market is betting that this dynamic about outdoor activities is going to continue. And this stock just looks to be strong, and it looks like it could be in a very long-term uptrend. Of course, if it drops below that 50-day moving average, you may want to change your mind. But for now, as long as it stays above 20 and the 50, you can always use that dip to buy into it. Let's talk about housing. This is a little bit complicated. Remember the 10-year bond yield started rising in October of last year. And as you can see, D.R. Horton, the largest home builder in the United States, has started struggling. But the stock is still above the 200-day moving average. And home builders keep telling us that business is booming, that business is great. So we have to see what happens if that bond yield that sets mortgage rates, the 10-year note, gets above that 1.2% area. Will this stock break down? At this point, I don't own DHI. And I'm not sure it's a good idea to own it. I'm not even sure it's a good idea to write calls on it or anything right now, because it's just kind of a unknown. But here's where something is really working. This is Brinker International, the company that owns Chili's. And in fact, they just started a new venture called Just Wings, in which you call in and you get your wings delivered by DoorDash. It's kind of a joint venture of sorts. But what they've done is they have really juiced up their takeout. I mean, I've been to a couple of Chili's lately, and there isn't a line out there, but all those slots are filled. And as soon as some car leaves, another one comes in. And amazingly, certainly in Texas, the dining rooms are pretty full, with social distancing guidelines. And these guys have done a lot to improve their food offerings, and they're really, really improving their takeout. So again, 20-day moving average, 50-day moving average, and 200-day moving average. Here's a stock. It's under accumulation. Unbalanced volume is nice. This is one you might want to look at for 2021. And the best thing here is that the slope of advance is not crazy. This is easily sustainable. So let's finish with technology. Applied Materials. This is a stock that I consider to be the centerpiece of the technology sector. They make the machines upon which all semiconductor chips are made. So when their business starts looking good, it means that there's increasing demand. So there's a couple of things that are juicing the demand for Applied Materials. Number one is there's a semiconductor shortage. Number two is that we've been in a down cycle for semiconductors for a while. And that cycle turns, usually it lasts for a good while. There are a lot of electric car activity going on, and a lot of people are working from home still and will likely work from home. They're going to buy laptops. So it looks like this stock can go. Now, it certainly has come a long way. It was up $8 yesterday, and it's likely to consolidate here. You see very, very strong accumulation distribution, very strong on-balance volume, very strong ROC, which shows momentum, and a huge volume surge over here. This stock would be one that you want to maybe give a little time to and see if it consolidates. You might come back down to 195 area. Let's see what happens. But I think technology is going to be crucial in 2021, no matter what else happens. So let's recap. We're still in a bull market for stocks. The Fed keeps pumping money into the banking system. Even though the bond market is getting a little jittery, the advanced decline line keeps telling us, yes, we're in a bull market. The bond market is critical if you get above 1.25 or 1.5 on the 10-year note. I'm not sure what happens then. It could be very difficult for stocks to start rolling further at that time. The big question, of course, what are the lasting effects of COVID-19? What's going to happen with all these vaccines? There are a lot of questions still to be answered. And of course, we have to consider what's going to happen with the stimulus packages. Bottom line, Fed keeping interest rates low. Your trading profits depend on picking the right stocks and remaining flexible and patient, following those trading rules. Well, that's all I got for now. Remember, consider getting a copy of Trading Options for Dummies, available at the StockCharts.com bookstore, Amazon.com, or a bookstore near you. Also, please visit my website, JoeDuarteandtheMoneyOptions.com, for a free trial subscription. Finally, we're going to post some links to my tutorials that I've done for StockCharts.com at the bottom of this video, so you can look at my previous videos on how to construct your own New York Stock Exchange Advanced Decline Line and how you can use it the way I do. I'm Joe Duarte. Thanks for watching, and we'll talk again.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.